Hey guys, what's up? This is Francisco with Valoriso Capital, and today we're gonna go through the trade reviews of the week. What I was thinking for this series of videos, what I'm gonna do, I'm gonna start reviewing my biggest winner of the week, but also I'm gonna start reviewing my biggest loser of the week as well, so that you guys can see both winners and losers. And I think this for this week, the both trades that I'm gonna show you, they're gonna teach you a lot of things, especially one of the most important things, which is risk management. Something that I failed to do with my biggest loser. I'm gonna go through all the through all the things that I was doing right, and how unfortunately I did not manage my trade correctly when it started working against me. So we're gonna go through that. And it was basically my mistake, as we are gonna see. It was more emotional than technical. So first of all, let's start with the winning trade of the week. The winning trade of the week is UPST. And what I was looking in UPST, right? Let me just show you really quickly here. If you guys wanna take a quick screenshot of the position in here in UPST, I started my position I started my position right here on February 24th, and then I added to my position on February 25, and then I make my final addition on the same day, a little bit later, somewhere around 2 hours later, when UPST started working really quickly, and then I ended up taking my profits on February 28th, somewhere around 149.92. So if you guys want to take a quick screenshot so that then you can understand the video, you can do so. So now let's go back to the charts. And we can see here that as I was mentioning, I started my position right here on this day on February 24th. The reason that I started my position is because you can see that UPST was basically going down for 1, 2, 3, 4, 5 days on a row. And when we usually get this, does not happen always, but when we get a stock that is going down for 5 days in a row, we usually get exhaustion, and we usually tend to have really strong short covering. Of course, I did not buy the low, right? I waited for UPST to reclaim all of the moving averages. And as you can see, if you have been following me for a while, I have the 8 exponential moving average, which is the orange. I have the 21 exponential moving average, which is the blue. And then I have the 50 daily moving average, which is the purple one right here. So, what was my trigger for the trade? My trigger for the trade was a reclaim of all moving averages, right? So as soon as we reclaiming that 50 and that 8 exponential moving average, I got my alert trigger, and I got my position. I started my position somewhere around 129, if I'm not mistaken, on this day right here, as soon as we reclaim all of the moving averages. So that was my first purchase of the position. And where was my stop? My stop was located right below this 21 exponential moving average at that time. Now let's go into what happened the next day, right? On the next day, we actually have UPST gapping up, and I waited for UPST to at least test this 8 exponential moving average, or probably even test this 50 daily moving average. And I wanted to see how UPST reacted to that test. So as soon as you can see here, right, you can see that UPST actually tested the 8 exponential moving average, and we started moving up. So as soon as I saw UPST pulling back, I set an alert when we actually start breaking above the high of the last day. And then I set a second alert as soon as we start taking out the open of that day. So if you go back to the position, you can see that my second buy in UPST is somewhere around this level right here, and my final addition is when UPST actually started taking out the low of this selling candle right here. And then what was my target, right? As soon as I make my second addition, and if you go back to the picture, let me go back just really quickly so that you can actually understand this. It's really important that when you're adding to a position, right, you make your first, right? You can see that I bought 15 shares on my first addition of right, on the first buy of the position. And as soon as the position is starting working, right, 130 and 130 and 137, I actually added less, right? So my first bulk of the position is kind of the big bulk, and then I usually tend to add just half of what I had here, because you have to understand that as soon as you're buying at highest levels, your average price is actually going up. So that way, if that happens, then you need to tight your stop. And that's something really, really important to understand if you're managing risk correctly. Now let's go back to the chart, and you can see that as soon as I make my right, as soon as I made my first addition and my second addition this day, I actually move my stop up to the low of this day. That way, if something happens, I can keep my risk really tightly, and I can protect. I can actually protect what I have, which is the value of my account. So I move up my stop right here into this low, and then I basically just let UPST work. What I tend to do, right? What I tend to do is that I usually use the 3 ATR, right? These are the lines right here are Keltner channels, which are basically they make a calculation for the average true range of a stock, uh, depending on what level you're using as your mean. And I'm usually use the 21 exponential moving average, but of course that is a topic for another day. But I usually what I tend to use for my targets, I usually tend to use the +3 exponential moving average, which is a place that you can see most of the time we tend to get really strong supports, and of course we tend to have really strong resistance levels. But of course, since the environment that we have right now, stocks tend to move and then they revert really quickly. So I decided to use this +2 ATR as my target. And as you saw in the picture that I show you, right, I took my profit somewhere around 149 because of course round numbers tend to act as resistance. So I wanted to get a little bit early in that position, and I actually was able to cut a really good move in UPST. And I think that the profits ended up being for somewhere around $600, and it was a really nice trade, right? This trade happened at the beginning of the week, and I was actually getting pretty excited because I thought that we were gonna get a lot of follow through into the next days in some of the other names that didn't move quite as much as UPST. So that led me to the next trade that I'm going to show you here, which is Doximity, is DOCS. And what was actually what called my attention in this name, right? What called my attention in this name, as you can see, right, we had a really strong day after earnings. We had a lot of volume coming into the name, a lot of excitement, and then actually the market was right. The market was really pulling back at that time, and UPST was actually holding pretty well, right? UPST was holding its 8 exponential moving average, and then UPST was holding its 21 exponential moving average. So that really caught my attention with sorry, Doximity, DOCS, was holding its 8 exponential moving average and was holding its 21 exponential moving average. So that really caught my attention in this name. And what I was looking for, right, you can see this is the selling candle that we have in Doximity in DOCS. And that selling candle, that low, was acting as resistance. So as soon as I saw that DOX was able to move above that, that really caught my attention. And as you can see here, right, this is kind of a right, kind of a cup and a handle, right? You can put the right, you can put the hot coffee there to add to the drawing. But right, we have the cup, we have the handle, and I was looking for Doximity. I was looking for Doximity to start moving above this handle, and then I was looking for my target in this trade. I was looking for a retest, kind of this resistance area right here, right? You can see that we had the resistance area right here, and we also had, I made a measurement in Fibonacci from this high to this low, and I was actually moving for a move to the 1272 extension, and I was looking for something around this level, right? Some of a kind of a move out of this cup and handle pattern, and I was looking for a breakout and a retest of that level. So now let me show you the actual position that I had in dogs. And you can see here, right, that I made my first bought in DOCS was on March 2. I bought it as soon as we broke out the 60 level, and then I added the next day as soon as we started open as soon as we started gapping above that handle pattern that we have. And unfortunately, right, this reversed completely on myself, and I ended up selling my position for 52.34, and I'm going to explain what went wrong with the position and why did I let this turn into such a big loser for my account. So let's go back to the chart here. And right, as you can see, as you saw in the picture that I just showed you about the position, I made my first right. I made my first purchase on DOCA on this day right here, because we gap down, and then DOCS reclaimed that 8 exponential moving average. As soon as it reclaimed its 8 exponential moving average, it called my attention. We closed at the high of the day, so I made my first purchase somewhere around here, somewhere around 60, and then I waited for the next day to add to my position. And as soon as we were gapping above this kind of this DTL, I was getting a little bit excited, so I added to my position. And what happened with this, right? Where was my stop with this? So the first day that I bought it right here, my stop was right here at the low of the day. And then since I added pretty closely to my first addition, I kept this low as my stop. So this day that DOCA reversed itself, it actually did it on pretty low volume, and we did not take out the low of this day. So I kept my position into the next day, and and this is what happens. This was my mistake. As soon as I was looking at the OCA's pre-market, the OCA's was actually gapping below my entry level, and I thought that the market was about to reverse itself, and that was my first mistake. My first mistake was that I thought that the market was going to do exactly as I was thinking. And since I was thinking that the market was going to reverse itself, what happened? I took out, right? I canceled my stop loss, which was my second mistake. I canceled my stop loss in the OCS, and because I was thinking that this was going to gap down and then turn green and go. That was my thinking. And that was my second mistake, and that was actually my most important mistake, because my if I kept my risk only to this low right here, my loss in DOXM would have been half the would have been somewhere around $300, and that would be half of what my winner in UPST was. And that's exactly what you want, right? You want your winners to be at least two times bigger as your losers. So my plan in DOCS was actually good, but my execution was not correct, because I canceled my stop loss. And then what happened? The OCS actually moved pretty quickly to the downside. I end up taking out my loss somewhere around here. So that's why my loser in the OCS ended up being somewhere around $700, which is bigger than my biggest loser in UPST. So that's basically what happened with my position here. It's actually really important to understand that the plan, right, my plan before the execution was actually correct, right? I was managing my risk. I added to something that was working, but the problem is that I did not respect my stop loss. And the reason that did not respect my stop loss is because I canceled it, right? So something that we always keep learning in this, right, is really important. Once you think that the market is going to do something that you believe it has to do, that's when the market actually does the opposite. So it's really, really important to never right, to never cancel those stop loss. Keep everything in place, because we tend to make the best decisions when the market is actually closed. And the moment that I made my plan in the OCS was when the market was closed. And then unfortunately, as soon as the market opened, things were gapping down. I moved my stop in DOCA. They basically canceled my stop loss. And then we had a really, really, really big day to the downside, in actually in a lot of increasing volume. We ended up even closing below that 50 DMA, and I ended up taking a loser, which was basically bigger than my biggest winner of the week. So it was really a choppy week for me, right? Things were all over the place. But of course, I understand that my plan was right, but unfortunately, my execution was not. So I hope that you guys found something interesting in this video. I was just trying to go through my system. I'm gonna start reviewing both winners and losers for the week in my trading videos that I make. I will most likely do the series gonna be talking about the biggest winner of the week, and then talking about the biggest loser of the week as well. We're gonna talk about management and all that kind of fun stuff. So thank you so much, guys, for watching. Remember to like and subscribe, And I will see you guys on future videos. Thank you so much for watching. I hope that you have an amazing rest of your weekend. Cheers.